The next pattern I want to talk about is the butterfly pattern, and I want to preface this training lesson by saying that the butterfly is not a personal favorite of mine, and it's not because the pattern isn't a good one. It's not because the pattern isn't profitable. Um, Actually, historically, it's been shown to have a really good risk reward. The issue I have with it is how it completes, and as we go into the teaching, as I start to draw this thing on, you'll see that unlike the rest of our advanced patterns, the butterfly pattern does not complete, or the decompletion, I should say, does not occur within the X leg. And my whole trading philosophy is built off of structure leaves clues and basically the power of structure levels. That the market is gravitated towards these structure levels, and that if a structure level holds, it tells us this about the market. If a structure level is penetrated, then it tells us that about the market. Well, in the butterfly pattern, like I said, the D completes above our X leg, which means we have a break and close below structure, which really goes against my overall philosophy of the market and makes it really hard for myself to determine a stop loss, since most of my stop losses are based off of having that structure protection there. So because of that, I don't necessarily trade this pattern, but I'm going to teach it to you guys anyway because it is one of our most popular advanced patterns. And well, if you do enough back testing and find a way to make it work, it could be very profitable in your trading. So the butterfly pattern, if I find some, scrunch up my charts, get the RSI out of here. The butterfly pattern, like our other patterns, start with an impulse leg. So we're starting with an initial X to A leg. So it's swing high to swing low in this case. We'll make this, make this our X leg, and we'll make this our A leg. We then want to bring in our Fibonacci retracement tool. We want to bring that from our swing high, so our X, down to our swing low. And unlike the cipher, where the 382 is our key area to look for, unlike the Gartley, or unlike the BAT, where our 50% is the key area to look for, unlike the Gartley, where our 618 is the key area to look for, the key area to pay attention to in our butterfly pattern is going to be our 786 retracement. And we're going to need that B leg to come to at least a minimum of 786. Now it can go past the 786. Our B leg can come to the 886 as long as we don't get a wick that pushes beyond our X leg. This is still a valid B leg for a pattern. But the key is it at least has to hit that 786 retracement. So as soon as the 786 is hit, what does that mean? Well, it means we no longer have a Gartley pattern and that we are now looking for a butterfly pattern. Next is the BC move, and let me clean up some of this. Keep our 786 up there. So again, we want to take our Fibonacci retracement tool, this time from our A leg to our B leg, and we're going to need a minimum of 382. Now with the butterfly pattern, it doesn't matter how far this leg retraces, just like our other patterns. It can come all the way down to X as long as the wick doesn't push beyond it, but we need a minimum of a 382 retracement here for our butterfly pattern completion to give us a valid C leg. Next is decompletion. Like the Gartley pattern, the decompletion should be an equal measured move from the A to B leg, meaning we should have an ABCD pattern completion. So if I copy and paste this move right here, our A to B, and I drag that onto our C leg, this is going to project where our butterfly pattern should complete. Now again, it is crucial, and it's well, the only way a butterfly is valid is if this D point completes above the X leg. So again, it has to complete above the X leg. But right here, you have your X to A to B, B to C, and C to D completion. You can also bring in a Fibonacci extension and look for Fibonacci confluence at that level as well. In this case, we're not going to get it. Okay, so let's draw on a bearish one. So let's do one more. Or actually, this is a bearish one. Let's draw on a bullish one. So a bullish butterfly is going to start the same. Impulse leg, this time from our, let's move this up some, this time from our swing low, which is going to be our X leg, our initial swing low, to our initial swing high, which is going to be our A leg. Again, we want to take our Fibonacci retracement tool. We want to go from A to B, or X to A, I should say. We're going to look for our B leg to work its way all the way down to at least the 786 to give us a valid B completion. We are then going to draw on Fibonacci retracement once again from our A leg to our B leg. We need a minimum of 382. Let's just say this time we spike a little bit higher. I'm going to go up and clean this up a little bit as well. Get rid of what we don't need. Say we spike a little bit higher to the 618. Remember, that's okay. As long as our wick doesn't penetrate the A leg, we are fine. So we have a valid C leg right here. Then I'm going to copy and paste my A to B leg, attach that on to my C, and as long as this ABCD projection completes beyond my A leg, we have a valid butterfly pattern. Now, some filters to think about. Again, look for Fibonacci confluence to line up with this ABCD pattern. In our earlier lesson, I gave you guys a little chart of, well, depending on how much an ABCD pattern retraces, this is how much we should extend to. You can start drawing a Fibonacci extension from our A to our B and back up, and then start developing a kill zone, say between the 127 and the D completion, or maybe the 1414 and the D completion. Some filters to think about when deciding on a kill zone. Now, as you can see, what I mentioned in the introduction to this, the issue is, well, where do I put stops? Where do I put stops on the butterfly pattern completion? Usually with our other patterns, we're going to see this. We're going to see an X to A to B, B to C, C to D inside of here. And we're going to easily be able to tell ourselves that, well, stops just need to go above this X leg because this is our level of major structure. We know that our impulse leg starts with a swing high to a swing low, and this swing high is going to be a structure level. So as long as my stop loss is above the structure level, then I'm fine. With the butterfly, this structure level has already been penetrated. So there's two ways that I look for stop losses on this pattern. The first way is going to be looking for previous structure. So maybe there's some structure in the background. Say before this impulse leg occurred, the market did something like this. Well, now I have previous structure looking back. So I have a level where I feel comfortable putting stops underneath. Unfortunately, you're not always going to get a good structure level near these butterfly pattern completions. So a way to take your stop is going to be an ATR based stop, meaning you want to take the average true range of your entry candle. You want to take the high of your structure, which is also going to be that entry candle. And you want to, in this case, because we're buying, you want to subtract 2 ATRs from that highest point and put it underneath. Now, that's the best strategy I can think of. I've been messing around with the 113 Fibonacci inversion going back from A to X, but you can see that 113 is going to put us before our butterfly pattern completion. Maybe you can work with, I would recommend, I would say this. I would recommend trading or testing out how price action reacts when it gets to this 1618 inversion from our A leg to our X leg, seeing if that's a good enough level to put stops. But you can even see in this scenario, look how far away we are from our entries. And just demonstrating, I hate to seem like I'm bashing this pattern, but you guys can see the problems that arise when it comes to having a consistent and a credible stop loss when trading this pattern. So I advise you to do your back testing, try out different things. Again, try putting in a Fibonacci inversion. So taking that Fibonacci extension tool from your A leg to your X leg and back up, and seeing if a 127 inversion will work well as a stop, seeing if a 1618 will work well as a stop, maybe even taking a Fibonacci extension or inversion backwards from your C leg to your B leg, and that's not going to give you much. You're going to have to experiment with it to make it to come up with a stop loss that works for you. Or you can be like me and just choose not to trade this pattern. So, which I've done. So let's take a look at some of these in real life. And I actually had to draw a little cheat sheet out for some with some dots because my RAS is not used to identifying this pattern. Let's see if we can get some. See if we can scroll through and find us a butterfly. I thought we had a few here. Okay, so it looks like I see one right here. We'll have to measure it out to make sure it does indeed complete. But we have our initial impulse leg right here, X to A. So our X leg coming down to our A leg. We're then bringing our Fibonacci retracement tool on from our X leg down to our A. And you can see that our B leg does indeed come up to touch a 786. We spike a little bit higher, but that's okay. Again, as long as we don't, as long as the wick of this candle doesn't push beyond our X leg, this is still a valid leg, and we do hit the 786, giving us a valid B leg. We then want to bring on another Fibonacci retracement after we clean up our other one. This time from our A leg to our B leg, and we need a minimum of 382. You can see this move spikes down right here, gives us a 382 retracement, so we're good to go as far as the C leg. Let's go ahead and get this C on there. Then, just like an ABCD pattern, we're going to copy and paste our A to B leg. We're going to attach that onto our C leg. You see that's going to predict our butterfly pattern completion, which is going to come in with our D right up here. And for you guys familiar with the other training lessons, you can also see we double top up here, and then we roll right back down. Now, again, talked about stops a little bit earlier. You want to take stops with this just as you would with ABCD pattern. So again, there's no, you can see there's no structure looking left. So the market's pretty much at no man's land. The only structure level we have is going to be up above here, and well, just not sure if you want stops to be this high considering the risk reward. This is a lot to risk for a little bit of reward. But for targets, we're going to take it the same way we do our ABCD pattern completion. So we're going to take a Fibonacci retracement from our A leg all the way to our D leg, and then we're going to roll that up with price action as it spikes higher. And you see we're going to look for our 382 for target ones and our 618 for target twos. Let's see if we can scroll through and find one more. Is this going to be one in here? We may have a small one in here. Let's take a look at our impulse leg right here, X to A. We can see our A to B. Let's bring in a Fibonacci retracement and see if we get a 786 hit on that. Looks like we just hits the 786. So let me type this in again, X leg to A leg. 786 gives us a valid B leg. You can see if we take a Fibonacci retracement from our A to our B, we come into a 382, even spike a little lower to a 50%. See our 382 right here, giving us a valid C leg. And then the easy part, copying our A to B, dragging that onto our C leg, and you can see another beautiful butterfly pattern completion right here at our D point. Stops needing to be somewhere up here. Again, let's see if I took a Fibonacci inversion maybe from our A leg back to our X leg, where would that 1618 come in? That coming a little bit higher up here. Looks like you may have a little better luck with the 1414, which is lower. But again, if we look at targets going from our A leg to our D leg, and of course rolling them up with price action, you can see this time we come down to hit the 382 for target 1, as well as hitting the 618 for target 2. Let's get one more of these out the way if we can get another one. You can see my eyes are starting to pick them up a little more. Nope. Cipher. Nope. Scrolling along here. You know, we actually have one right here. It's a little, this is going to be a really sloppy one, but check this out. Our impulse leg X to A. X leg to our A leg. We can bring in our Fibonacci retracement, swing low to swing high. You can see we come past the 786 all the way down to the 886. But again, as long as our candlestick wick doesn't pass our X leg, this is still valid. Now, let's do this first. Get our B on there first for you guys. B. Now, when we take our Fibonacci retracement from our A leg to our B leg to predict our C completion, you can see this happens. The market spikes up. So originally at this moment, we have a valid C leg here. Again, we spike up. You can see we're well past the 382. This is a valid C leg, and we'd be projecting an ABCD completion to look something like this. So our D completion down here. However, you can see that price action refuses as it makes its way down. I'm going to move this to the side for a little bit. As it moves our way down, we never break our B leg. So we never have a completed move, and we actually retrace a little further up. And what that does is, instead of making this our C leg, because this gives us that higher high in this case, and we never penetrate the B mark, we're going to have to adjust our C leg all the way to this move. And this is a sloppier pattern, maybe a little easier on a higher time frame, but I want to show you guys an example because not all of these patterns are pretty, for lack of a better term. And when you first start trading, I recommend just trading the ones that really stand out to you. But as you become more experienced, you'll start to notice more and more patterns like this, where the movement inside each of these legs is a little more rigid. Anyway, we can delete this mess right here. And since our C leg changed, what that's going to do is going to change our D leg. So instead of taking the ABCD completion from right here, we're going to have to adjust that to our C completion right here, which puts our D here. And look what we have. Butterfly pattern completion, price action coming right down to our D leg. We take our Fibonacci retracement from our A to our D, and we roll up easily, hit target ones, and then target twos. So that's it for you. That's the butterfly pattern. Didn't take too much time on this one. Again, it's not a favorite trade of mine, not a favorite pattern of mine, as you guys can tell. But with the examples I gave you, it actually is it's a pretty profitable pattern. And from my personal experience trading it, it's very efficient. Meaning when these things roll over, they roll over at a high rate. The only issue is that stop loss, and I personally don't want to introduce anything that goes against my trading philosophy. Uh, but I recommend testing it out, trying it out, and you may find a gem that's going to do your account some favors. So that's it for the butterfly traders. As always, go through your price charts throughout the week and practice recognizing these.